check out the ARK Innovation ETF closing in the red again today, now down over 9% this week. The moves by this fund have been closely watched by Wall Street. News yesterday that Cathie Wood bought more than $124 million worth of Tesla stock, sent the stock up after hours. It added another 6% today. Wood and her stock picks have developed quite a following among retail traders. One fan tweeting in response to Jim Cramer saying, "Our generation loves her." For more on all of this, let's bring in Andrew McGormand of Wallach Beth Capital. Andrew, great to have you with us.
Hi, Melissa. How you doing?
We were discussing the move in Tesla yesterday and the fact that, Cathie, we learned Cathie had gone into the market to buy Tesla shares that day. Could we trace that move back to her? Does her ETF have that kind of power?
Sure. I mean, look, if we're going to talk about scale, right? Every idea has scale no matter what wrapper it's in. The end of day move is after the fact that she told you she's in the stock. So that's your Reddit crowd saying, we do what she says to do. I don't think yet her kinds of trades where she was buying in the morning is what kicked Tesla higher. In addition, obviously, her ETF went higher as well. It was a reaction to, okay, the market sold off a little bit at that 940 low. She smartly buy. Remember, she buys as an institution. ARK is an institutional buyer. They come in and they plan out the impact that their trade's going to have on the market, however many dollars she was going to put into Tesla. The ETF itself trades at market makers. So they are handling the intraday of all those stocks, right? When the ETF goes up, the market maker is selling the ETF and buying the stocks. When the ETF goes down, the market maker is providing the ETF to the selling retail public or institutional public, and then selling the shares, right? Making the move go on. So Cathie is not having to trade those intraday names per day outside of her normal PM.
The question I have is the illiquidity, and this is an ETF question overall that's in her portfolio, right. And it's not in Tesla. And again, we're not here to Cathie's done an amazing job. And she is clearly seen as a cult figure of sorts, and good to her for that. There are positions in that portfolio that are disproportionately large to their underlying liquidity, and an ETF is only as liquid as its components or constituents, not necessarily how big it is.
Right. So I'll give you we'll just do an example for scale, right? So everybody can understand what you mean by that. So Karen, let's say you and I come to you with an idea and say, I've got $10 million. I want to launch this portfolio around technical indicators. And I'm going to trade that portfolio 10 times a year around these technical indicators, right? And it's going to make 20%. So the market behaves like I think it's going to. We trade 10 times as PMs, and it costs us 0 bips to get in and out of that trade. Now, the next year, the strategy is so popular because we raised 20%, we raised $2 billion. Just like Cathie Wood has, right? So now I have to do those same trades in the same names, in the same technical indicators. Let's say all that's the same. Everything's lined up perfectly. However, it cost me 200 bips to get in and out of those names. Every time I trade it 10 times. That's a 20% drag on performance. The strategy returns 20 cents. The trading of it drags 20%, 0 return. So that's what could happen in this idea of the smaller cap stocks. It would be very hard to say that she's not having an impact on those names, especially when you add the Reddit crowd following her, maybe not necessarily buying the ETF, I'm sure they are, but they're going out and buying the names that she has, and that's buying a trade after the fact. So it's buying a crowded trade after it's already crowded, and I would beware of that.
So let me ask you something on the heels of that. Does she have to disclose her moves, or is she choosing to disclose them? What does the...
That's a great question. So she is active, right, it's an actively managed ETF. Now, we've seen problems like this in actually passive ETFs, right, that are large, where the trading public, the pros, know these moves are going to happen because it's out there to happen. She certainly does not have to disclose, like she did not disclose yesterday, I'm sure, that she was going to buy Tesla on a dip, because then all her Reddit people would have bought it and made her buy disadvantageous, right? So she has to disclose. There is a period where she discloses, outside of the 13F, certainly to the market makers, because they need to know how to hedge. But it's an actively managed process, and it is not Karen, it is not a cut and dry, here's my portfolio, 30 days, here's what it is, and I'm going to tell you what I do before I do it. That's why it's actively managed, right? We always talked about, hey, if Stevie Cohen back in the day had an ETF, it would have been brilliant. But why didn't he do it? Because he doesn't want to tell everybody what he's doing before he does it. But in the actively managed ETF, she has some ability to do those things.
Mm-hmm. Andrew, thanks so much for your insights. We do appreciate it. Andrew McGorman,
thank you so much.
Guy, what's your take on all this?
I don't want to get wonky here. I don't. But this reminds me of what happened, back in the day with the Goldman Sachs Commodities Index, where the market knew they had to do certain roles, certain days of the month, and the market would get ahead of them and, in our language, run them in. And to a certain extent, that could potentially happen here with Cathie Wood. I think what will happen is she will adapt like all great baseball players do when pitchers start to figure them out. I think that's what will happen here. But make no mistake, when you get to the size that she is now, there are going to be a lot of people out there trying to get ahead of whatever positions, whatever trades she has to put on. It's going to be fascinating to see how this thing morphs over the next few months.
Shepard Smith here. Thanks for watching CNBC on YouTube.